Good morning, everyone. Welcome to Unconventional Wisdom, the live MMT show, where we bring panelists of expert traders, people with tons of experience in different aspects of banking and trading, into one place so we can all talk about these topics, new topics every week. So thank you for being here. Um, really excited for this week. We have a good one, and I think the timing of it is hilarious because I'm sure anybody on here realizes what's happening with GameStop and GM and AMC again, and it's kind of bringing PTSD back for some people and some joy back for others, but a lot of conversation either way. Um, it's funny enough because if you guys saw on our Facebook stream, our topic for this week is volatility and how to use it safely. So I think it's very fitting. We have a great group of people to talk about it today too. Randy is a bit of a longer term trader, but a lot of his trades that are not.
Are you trying to say that I'm old?
Oh, no. The trades themselves. Yeah, I can't recover from
It's a
that. You got
light word.
absolutely, but he works a lot in momentum, so he understands volatility and overarching volatility and how things really come to be a downtrending stock and take that turn into that. And volatility has so much to do with it, of course. Um, Tim and then hopefully Deshaun, who will be here, trade within seconds sometimes. Little tiny trades. So yeah, a much different type of volatility, but volatility when I can tell you they have seen some volatility and have some experience with it, they do. So
Yeah, Mike,
Joe, yeah. How are you, Joe? Personally, and then
their
how's
their trades on their 16-second trades, 54.35%
today?
today. Yeah, and for the week, they're up 178.06% for Monday through today, because they are finished for today. Yeah. So.
Wow. That's a record for in a while, right?
The 178 is, yes. They've been getting these 40 and 50% now for a couple of weeks. Last week was up, wasn't quite this high, but it was up, I think, 138 or 40, something like that.
Wow. So new PR.
Yeah.
For clarification, when we talk about those returns, that is a combination of Tim and Deshaun, our coaches, and their live trades on just that session for the day.
Tim trading Apple and Deshaun trading SPY. And pretty soon we'll be trading QQQs in there also. So.
Absolutely. How's the course going? Everybody's still learning and doing well?
We get reports every morning. Everybody, taps in on the question box, and good. They're doing as well as Tim's doing here and Deshaun are doing. It's just the returns. And just this last couple of weeks, huge volume, because that's what we trade on. We don't worry about things going up and down in prices. We just trade the volume. So perfect market for us, yeah.
Yeah, it's been a big week. Been an absolutely big week, and fits into volatility perfectly.
Yeah, absolutely. Because the more volume you have, the clearer those moves are, especially in the short term.
Yes,
that's awesome. I was going to ask. I don't think I have that information anymore. That's all good. Moving on. So, Randy, how was your week? First of all, how you doing? And then
going great.
Yeah. Well, the trade's going
great. One thing is that the weather's warming back up, so we're not quite so freezing. Can actually go out and walk in short sleeves again. So that's nice to get out and get some sun and move around. But other than that, it's been a wild week, and lots of activity going on with all of this volatility. Been doing a lot of management because, as Joe usually says, what I do is with synthetic covered calls. And stocks go up and down. That's what they do. And we want them to go up and get called out. But we have management processes that if they go down, we just make the position better and better and better to still get called out, but at a lower strike. And things have been going up and down a lot this week. And so been able to do great job in managing, moving that the positive called return position lower and lower, and we're in great shape now with the market coming back yesterday afternoon. Speaking about volatility, that was volatility yesterday.
Yeah.
I was kidding Randy earlier, Micah. I said, look, you got all those millions of people trading that GameStop. So let's just make an announcement on this program today, because he traded 2 GameStops yesterday. He's developed one of his synthetic covered calls. He can do a GameStop for practically nothing. I said, let's just put that out so everybody's listening to this. And say that we'll just have 15 million signups at what? It's $100. What is it?
I am curious. I mean, I know it's still up. What are you? Would you care to share your position, like your entry on that, or?
Oh, I have it all the way down to 99, and it's trading at 127, 128 right now. So
Wow.
that's just a highly speculative kind of play money. Just I plan on potentially having to manage it, and with the management, I can, if it moves down, it's just as fine. But as long as it stays above,
you can do it too. Sign up for
No. There's plenty of activity going on out there on it, but nobody's down at the level that I'm at. They're all speculating way up there, thinking it's going to go to 300. Last night on the financial shows, they were talking about GameStop, and they said the 300 calls were going for $6 a piece. It's only trading at 126, and people are buying the 300 calls for $6 for tomorrow. That's just insane.
Tomorrow's expiration?
It's crazy.
Tomorrow's expiration, the 300 call for $6.
Is that retail or is that more institution?
I think it's all retail. Yeah.
This morning they were talking about that institutions were starting to come in on it now because they said that the CFO is stepping down, and the activist investor that's going to be able to take over the future of direction of it, and it's going to go online. I mean, there's all kinds of stuff they're talking about.
Their trial is still active too, I believe.
Yeah, and
according to CCB, he also one of the head honchos text a picture of an ice cream cone, and for some reason, just went straight up after that.
You know why, Joe? Is because that activist investor that is now on the board, his last name is Cohen. So Cone, the ice cream cone, is saying Cone is in now. Buy. That he was going to fix the store. It's a whatever they call that a parable, or not a parable, but it's
analogy. Yeah.
It's analogous to. That's for Cohen is in now. We're going to change what's going on, so we're going to fix the store. Is what they're. It's a whole big thing that they have going on that over there on that Reddit thing.
Yeah, and interesting. So Tim, first of all, if you'd be willing to give us a small example of a brief description of volatility.
Sure. Yeah, let's start with a basic definition of volatility. And volatility, it refers to the amount of uncertainty or risk related to the size of changes in a security's value. So a higher volatility means that a security's value can potentially be spread out over a large range of values. This means that the price of the security can change dramatically over a short time period in either direction. A lower volatility, that means that a security value, it doesn't fluctuate dramatically. So what that means basically is high volatility means we have larger price fluctuations. Right? It's going up, it's going down, it's going up, it's going down in wide places. So it really just refers to the amount of variability in pricing over a period of time. And so what that means for us, and this is different than what it means for Randy, is for us MMT traders, we love volatility. We trade on volatility. Price volatility, we're talking about, two sides of the same coin. So what we see is at a basic place, when we have wide Bollinger Bands and we're seeing that tick, bounce up and down inside those Bollinger Bands, we're experiencing a period of high volatility. A buck, $2 between those Bollinger Bands, that's high volatility. But what that means for us as traders is we tend to get longer, straighter lines, tradable periods of time that we have predictable direction in the tick. But, just at a basic level, it just means a wide fluctuation of pricing going on within that option or that security.
And I think there's a clear distinction to be made of volatility means a much different thing if you are trading, if you are just buying and holding stocks versus trading.
Yes.
Because there's a lot more to it. Randy, could you explain a little bit what you mean by you were all the way down to 99? Because I feel like, there's probably a couple of people on here that just buy stock and then sell it when it's higher. And then, maybe learning what a short is. So how did you mean, that? And I just want to show how there's more than just buying and selling the stock.
Yeah. Well, a couple things. So volatility on Tim's side means it's great to be able to get in and out of things even more quickly with good definition of declines and rises. From a covered call side, volatility means the premiums are higher. So the opportunity to make additional income is greater because high volatility means there's a lot more speculation going on. The more speculation that goes on, people are expecting it to do either a rise or decline. That's what makes the volatility, and the premiums go up because they're willing to pay, like on GameStop, $6 for the 300 call. That's $150, $170 out of the money now. That's huge speculation, but that drives the premium of the calls up, which allows us to get higher income levels on the covered call. It also allows us to be deeper in the money on the covered call. And what a covered call is, for those that may not know, the basic covered call is you buy a stock and then you sell a call option against it, which means you're selling the right to somebody to buy the stock back from you at a set price up to a set date, the expiration time. And typically the market uses covered calls to speculate. They buy a stock for 100 and they sell the 120 call thinking it's going to go up. If it doesn't go up, then the person that bought the call loses their money. The person that sold it just has that income and the stock is just in their account. What we use the covered calls for is to generate weekly income. We sell in the money covered calls. So the stock could go up, we get called out and we want to, so we get our cash back to be able to select a new position. If it goes sideways, we get called out and we want to. If it goes down, we still get called out because we're deep in the money on the call that we sell. We still can generate 3, 4, 5% a month, or if we use synthetic cover calls, we can do that much in a week. And so that's how we use covered calls. So when there's high volatility, the premiums go up dramatically and we can get deeper in the money meaning that, say we are buy a 50 strike and sell a 52 strike on a stock that's selling at 70. That means we're going to generate income and get all our money back as long as it stays above 52 and it's trading at 70. So we can drop $18 and we'll still get all of our money back. And that's what is critical to me right now with all this volatility is I want to be back in cash as quickly as possible. Tim and Deshaun are back in cash every day. So they don't care what happens overnight. If the market gaps down 300 points, it doesn't matter to them. They just start all over from wherever it is. Right. I try to be back to cash at the end of every week so that at least whatever happens over the weekend or whatever's going on, I can get reset and get all new positions for the following week. So the deeper in the money that I am, the more the stock can even go down and I still get all my money back and lock in those profits. So when you're talking about GameStop, it's trading at 129 now. The volatility on GameStop, it's as low as 101 today, as high as 170 today. So it's fluctuated almost $70 today. And that's volatility. So the position that I put on says as long as it stays above 99 tomorrow, I get all my money back and make about a 45% return on the capital that I invested today.
Yeah, Tim, you ought to try Tim tomorrow doing GameStop. The way we do our deals in the morning.
Oh, those options are really expensive.
Yeah, I don't know.
They're really expensive.
Yeah.
Yeah, I think we've been doing pretty good with SPY and Apple this week.
Yeah. That the GameStop. Let me tell you what the at the money call right now is $30 per share. When Tim and Deshaun do things, they're looking at $1, $1.50, $2 maybe per share of investment. When you're talking about putting $30 per share out there on such a speculative, that's a huge risk on that.
It still be the same principle. It's just be fast. It'd be real fast.
Yeah, you have to use more capital, and it would be really fast.
Yeah,
definitely, because that thing is going up and down like crazy. It's those speculators out there on that GameStop are unbelievable speculation that's just creating huge swings in the market.
Yeah, I hope before we got on our morning session this morning, I've been pulling up GameStop every day and have it up just to kind of get a gauge on whether it's going to mess up our platform due to trading amount.
Which did happen the first time pretty significantly.
Yes, it did. It did. And it happened earlier this week. We've had some significant delays on execution. So I look in this morning, I look at Apple, it's about 3 million pre-market, which is about, what it is. And I look at GameStop and it's 14 million traded pre-market. And I'm going, oh, there's no way we're going to get trades in. There's going to be a massive sell-off on the open. And, but we didn't have an issue executing trades this morning. So I'm not sure.
See, that's another thing about when there's huge volatility, and if the equity or the market overall changes significantly in a short period of time, the market will halt trading, and you won't even be able to make a trade. And GameStop was halted 2 or 3 times yesterday by the market, not by Robinhood, but by the entire market. Just said, we're stopping trading right now. Because they want everybody to catch up to say, why the heck has it been moving so much? There must be some kind of news, and they want to give time for even the average person to be able to go search what's going on before they start trading again. So you really know it's volatile when they have the halting on the trading.
Mm-hmm. Yeah, it's really the Wild West with GameStop.
How are you? First of all. Oh, thank you. Yeah, you're muted. How are you today?
Oh, lovely. How are
you? Good.
You got clean face, baby face, Micah.
First time in 4 years.
Micah has shaved his beard, and Deshaun's getting his back again.
Yep. Yeah, we're just trading. I just just slipped that in an envelope, mailed it off. We're all good. It took a little bit longer because of the mail delays, but I finally got to it. And I hear you guys were absolutely just slaying on the webinar today.
Oh, all 10 mostly. Yeah.
Well,
that's awesome.
No, hey, you had on your SPY. What was it? You were much above. Let me tell you. Let me get over where I have it.
Well, I just came back from doing this. Just got here so I stayed an extra like 30 minutes and did some.
I take it back.
People, but yeah.
You only did 3%.
Yeah.
Apple did 51.35. So.
Lots of teaching time.
Yeah.
Apple's just been very favorable. We've just had very predictable put runs going on Apple, and we're just able to predictably go in there and take chunks out of it, and it's been good. It's been very good.
Now, kind of getting back on the topic, and Deshaun, the main of today is volatility and how we can safely use it. I think I already sent that to you though. One key thing I'm noticing that you and Randy have been saying, Tim, is you keep bringing up time frame. Mm-hmm. And I think that's a really good point, because if you look at a chart, a stock goes from 10 to 30. If it happens over 2 years, then congrats. But if it happens in a day, then it's the biggest news online.
Right.
So I think time frame is really I don't know, it's a really big part of it. How do you get a sense of that time frame when you're zoomed in? Like we're talking days down to seconds. There's really enough volatility there, or can you explain the how you use the options to kind of accentuate that?
Sure. Yeah, absolutely. We obviously deal in much different time frames than Randy does. We are more concerned with moment to moment price fluctuations because we make our trade decisions based on moment to moment price fluctuations. So we are zoomed in quite a bit in our charts to really get that current information from the tick. I mean, I want to see every movement in the tick because, you know, an average trade for us these days for Deshaun and I is 15 seconds. So we're in and out very quickly. So we're very concerned in very, very short time frames. We're very less concerned with longer time frames, right? Because we don't trade in that time frame. We trade very tightly. So, you know, sometimes I'll zoom out and look at a 3-month view in Apple and go, oh, wow, it's been trending up significantly over the last 3 months and I wasn't really aware of it. Or it's been trending down over the last 3 months. I'm not aware of it because we just work in micro moment periods of time. So, you know, our time periods are just much tighter. So it's you know, volatility is really everything to us because we trade off of a volatility. We're looking for directional moves that last. So, but we don't need it to last for, you know, 2 weeks. We need it to last for the next 30 seconds.
Yeah. Deshaun?
Yeah.
Oh, sorry. I thought
no, I'm sorry. I just did a quick trade on SPY.
Oh, nice. Yeah, Marion mentioned it earlier, but if you notice, Randy's looking right, Tim's looking left, Deshaun's looking up. They all got their charts up right now. Yeah. Is something happening? Whenever all three of you look at the same time, I usually ignore it until it's the same time. What's going on?
John did 4 trades after we left the session to come over here. He was later. He was doing 4 trades. So.
Oh, wow.
Nice. Yeah, there was just a pinch happening on Apple, and then just a push to the call side happened very quickly, and it's already retreated. I was keeping an eye on that and kind of keeping an eye on the on GameStop over on another monitor.
Yeah.
We might try in that corporate account, but just one share at GameStop tomorrow and see what happens.
There you go.
I mean, if it's plowing up like that, if the volume's astronomical, it's not going to be but a couple of seconds.
Yeah, I've thought of it, but I don't know. I don't know. You know how I hate giving money back.
Yeah.
See, but Micah, another thing along the lines of the time frame, if you're the buy and hold investor, right? You have a retirement account. You're 25. You're buying a good, solid, quality company today, and you have 30 years before you even need to access that money. The daily volatility, the daily changes mean absolutely nothing to you.
Right.
In fact, you shouldn't even be able to look. You shouldn't even be looking at that because you're just looking at the long term. You know, if you're buying a Microsoft or a Walmart or an Amazon or what, and you're just thinking it's going to go up in the future, that the daily volatility means nothing. If you are trying to get in and out of a position in 2 minutes, then the moment by moment volatility is what you use to do that, and it does mean a lot to you. I'm more of a 3 and 4 day time frame on my position. So the daily volatility presents the opportunity for entry of my positions. I'm looking for the bottom of the cycle starting to rise again to enter the covered calls. And we do that by looking at our charts. And so I welcome volatility to be able to enter at a lower place because we want to buy low and let it sell high. And it's not speculation because it can go up, sideways, or down, and it's still good for me. I'm not speculating like buying GameStop and hoping it goes to 300. That's speculation. The covered call process that we teach is an in the money covered call for weekly income generation. And we go in the money so that it can go up, down, or sideways, and we still get out of the position. And so that volatility gives me the opportunity to say, oh, now's the good time to enter this position because it's low with on the way back up.
Randy, is that 3 to 4 days the length of your nap?
Yeah, no, that's your nap. That's your nap, Joe. Mine are shorter than that, but no, but like I got in at SPY position this morning. It expires tomorrow, so that's only a one day trade, and so I like to just be in one day, but usually it's 2 or 3 days because of the time value that I want to get on it.
Yeah, and yeah, one key point I want to highlight, which Joe, I'd like your opinion on, is the importance of moving past. Oh, that stock does well. It has good numbers. I'm going to buy it and then maybe sell it in a while. That stock's been doing poorly. I'm going to sell that out of my portfolio. Once you move, because you come into trading, you think that's all it is buying and selling. We do very little of that. That core function of buying a stock to sell it higher, we do very, very little of that. And most of our entire function as an entire panel is in that alternative world. Mm-hmm. I think there's something to be said for that. And Joe, what made you realize that back in the day when you were looking at stocks moving up and down? You're like, that's boring. We can do all of these other things.
Well, back in the day when I got started, I was teenager, and you pretty much you could only go to a deal for the long term because that's all you could do trading wise. You just didn't have the ability to trade. So generations, developed doing covered calls according to that. First you had to go down to the broker's office, so that's slow. When you finally were able to do it online, that's when I left Merrill Lynch. It was still a slow process. You still didn't have these fast information coming up. You had your stocks filing, you had your calls you could sell. So it was more dictated by your ability. Then when we started doing micro moments, that wasn't a couple of years ago, guys. We started doing micro moments. Mm-hmm. That's when we really got away. I departed from doing the traditional covered calls like Randy, because Randy had taken it over and he does a fantastic job, and it is a lot slower, but that's fine if that's what you do. And then just like everything kind of developed over the years. Micro moment just kind of came from somewhere. I don't know what motivated the three of us to start doing it, but we did, and it deals just on volume, doesn't deal on anticipation of prices going up or down or anything, and it's just really carefree. I've got to do the article for the Bright podcast next week, and it's on tensions in trading and how you handle them. And so I Googled it. There's nothing on that in the face of the earth, so I'm going to have to make something up. I've decided what it is that anticipation, like you build up tensions when you're an anticipation trader, you're a day trader. Yeah. You build up those tensions that way. But we're not tensions, so I guess we're the solution. So.
I think that's a really good point. I'm super excited to hear that.
Yeah,
what you have to say on that.
Yeah. And Marion brings up a good point about the psychology and your mental aspect with the volatility. If you're just a speculator, you can get really, really tensed up with the huge changes in the market that's happening. Like yesterday, the Dow Jones 588 points from being down about 200 to closing up about almost 400 just within the day. So if you're a speculator and you're expecting it to go in a certain direction and all of a sudden it changes and goes in the other direction, then you're panicking. Mm-hmm. You see, with our techniques, there's no panic because with the covered call process, I've set it up to be able to go up, down, or sideways. And if it goes down too much, then I just implement the management techniques. And it's a whole process that allows me to be cool, calm, and collected, because I know there's another step I can do to not have a loss on the position, to get it into even a better position to make a profit.
Mm-hmm.
With Tim and Deshaun, they have the chart. If they didn't have that intraday streaming chart, that's what gives them the cool, calmness, because they can see exactly what's happening and be anticipating the direction based off the momentum. And so that gives us that we're not in a panic mode. But you see a lot of people out there, they panic and they sell for a loss, and then it goes back to a profit and they beat themselves up because they we don't do any of that. We just do our trades.
We don't get worried about a loss either, because we teach all our people, and on that chart, when you enter that trade and that little sucker that little button down there is still red, immediately just get out of it. So that is you don't worry about it. You don't sit there and wait for it to turn green, because you're going to lose money. You just immediately suck up 1 or 2 pennies, and then 5 minutes later you're back into the same trade, because you're in and out of them so fast.
Yeah.
So we don't. Go ahead.
Because what we do is teach a whole process. We're not teaching speculation. We're not saying it looks like this company is going to have great earnings next week, so we don't do any of that stuff. We teach a whole process that's rule-based and based off the charts that says, here's the right time to enter, here's the position that we'd want to do, and if it goes differently than what we expected from the charts, here's the next step that we would do. So we're not selling for a loss. Now, what Tim and Deshaun do, they just get out of it really quickly because of what the chart says. So
there is no management ability on what Tim and Deshaun do at all. There's no management technique. It's either you're in and you're not speculating. We know it's going to go up or down. And the chart says it's going up right now. And if we're reading the chart wrong and the chart's wrong, we suck up a small couple of cents loss and go jump back in, to another trade. So.
And I think that's an even deeper point, Joe, because underneath all of this, the big thing happening is Tim has traded Apple today, yesterday, and the day before, and the day before, and the day before, because we don't buy. Even Randy that trades a bunch of different. He doesn't buy the stock. He doesn't have any romanticism over. And when it comes time to sell for a loss, you're not like, well, their court case is doing very well and their financials are good and they have very little debt, because the market doesn't care. And the longer we go on in the market, we realize it doesn't care. I used to be just blown away. I would come out, I would get ready for these earnings report, and I was going to trade earnings, right? And I was so excited. And I was like, yeah, because earnings are such a clear, thing that I'm going to be able to have so much advanced knowledge on. And I did all this studying on earnings, and I realized very quickly, if the earnings are positive, the stock can go up or down, a little bit or a lot of it. If the earnings are negative, and that's not just about earnings. So I think focusing on that process, the technical process of how you extract money from a market, you don't care if it's Apple or Microsoft or Q, because when something moves up, it makes an upward line, and that's simplification of all.
Michael, what do you think Glenn's talking about there?
When I said you had to have a little S&P, the S&P little book, I figured that was a reference to
the old time trading, I think.
Yeah, old time options.
Oh yeah.
Do you remember the little S&P book, Joe? Or Randy?
No.
Or Tim?
Not me, but Joe was involved back there in the broker. That probably refers to the information that they had a long time ago in order to trade the options.
That was a big part of the information we had back then, because we didn't have you couldn't get the stuff on the computer.
Yeah, absolutely.
Well, when you started, Joe, they didn't even have computers, right?
They did not have the computer, and I was Merrill Lynch, and we did not have a computer. We had sort of
spreadsheets.
Yeah. And we didn't have charts. You had a chart room, and you go in and deliver charts 2 or 3 times a week. So they weren't exactly up to minutes, Charts were like, huge pages and on huge tables.
Wow.
And you can imagine how slow that was. So
Imagine a 6-second fill delay, Tim.
Yeah, there was a 6-day trade was fast.
I imagine. At the speed we work now.
By the time you looked at your S&P book and went to the chart room and stood in line, somebody else.
Craig says, go ahead, Tim.
MMT became so much easier once I saw the light and got out of trades when it turned red. Geez, what an idiot I was for a while. No, Craig, you're not. Well, first off, you're absolutely right, but no, you're not an idiot. Everyone goes through this process of figuring out when it's time to get out. We fight this this feeling inside. I think it's mostly it's either fear or greed, but we all fight this emotion of if I just stick in, maybe it'll come back. Maybe it'll come back. It's the maybes, and we all fight this, and we all have to learn this lesson in the beginning with MMT trading. That when that tick turns, that's when you get out. Don't hold. It rarely comes back. Sometimes it does, but it rarely comes back. But imagine this. Rather than waiting for a 10-cent loss or $1,000 loss, what if you got out with a $100 loss, waited for that tick to turn and re-entered that trade, for a $500 gain? If you had let that slip to a $1,000 loss, you'd have all that to make up before you could get profitable again. So, what we teach is we're trying to get out with as few cents loss as possible, 1 to 2 cents. Those are what we call good losses. And if you do those, the profits will take care of themselves. We all miss time entries. And there's always those occasions where the tick just turns for no reason at all. For some reason, other traders are selling, we're selling options, and it moved the tick price up. Or for whatever reason out there, Apple suddenly rose 30 cents and it moved the tick up. Those things happen. We have no control over those, but we do have control over when we enter and when we exit. So we control those losses as tight as possible.
And another thing, Tim, is that the commissions have gone to virtually nothing in some cases. That facilitates these multiple trades.
Yeah. Yep. Absolutely. Apple is doing a nice move down. I'm gonna have to jump in on this.
See, like today, y'all did 9 trades in the course of an hour, and that's a lot of trades in an hour. That's between John and Tim.
Yep. Absolutely.
Yep.
Yeah, and it's just a whole different world. It's funny, Tim, when you were explaining that, I was kind of like, it kind of sounds like a stock. You can't really like how our own accounts and mentality, like you can see why the stock market moves the way it does, because at the end of the day, I know there's a lot of automation, don't get me wrong, but at the end of the day, it is a conglomerate of human minds and how they react to each other. And I think once you see it as that, and see it as people and institutions making trades with motivation, that really helps take some of the weight off of it is stressful. So next week is perfect because we're going to go into trader fatigue. And then the things that Joe was talking about, those stresses that kind of get to us. So I'm really glad we ended up here because I think it's something that doesn't get talked about a lot in the trading community, because people are so busy, telling you how they made, this 1,000% return in the first week, and how you should also buy a Lamborghini after you work with them for a month. But we have all taken losses. We've all taken a lot of losses, and it's all a part of it. And understanding that is how you can continue to perpetuate yourself forward. Because the first thing that popped into my head, and when you were talking, is that gives you access to 10 losses. That one stubborn hold is not only you could sell and then re-enter and it could go up, but you could sell it for loss. It could fail, and then it could fail again and 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 again, and then you'd be even.
Yeah.
So I think giving yourself more time on your volatility, it's just funny how it wraps around. Maybe my brain's.
And this is a compliment to Tim. when Tim first got started with us, he just did terrible. He had losses all the time. Today he made 30%, in excess 30%. He very rarely has a loss. Sean very rarely has a loss, and every 1.2% or some stupid thing like that, But Tim certainly he decided one day, said, "Damn, I'm just not following the rules," and he started following the rules. And then very seldom has a loss.
Yeah, that was it, and that was it exactly. I got in, started doing pretty well, thought I knew everything there was to know about options trading, and started disregarding the rule, thinking I could predict the market, and blew up my account and lost a ton of money, and rebuilt it by just following this simple rule of focusing on tightening up the losses, and built back up from there. And it's a lesson I have to remind myself of this every day. Don't have, I'm not God. I don't have a crystal ball, and I cannot predict where the tick's going to go ultimately. But the longer we work with a stock or an ETF, you start to see patterns. You start to see cyclical movement within the stock. You start to see a certain behavior or personality of that stock, which is why we recommend that you, in MMT, that you stick with one stock and learn its behavior, which seems to help.
Absolutely.
What's funny is Deshaun did the exact same thing. He did the exact same thing. He started off just going gangbusters. He thought, again, thinking he knew every single thing, and then he ended up losing me. But now he's back to where he does know everything now. I think too. One of the reasons that on our little question box, people start typing how they're doing very first thing when we have the first session, and they're making better returns than these guys. I think the point is these guys are sitting there talking, and these people at home are trading, and they're quicker because they don't have to sit there and talk and think and talking, So
you guys also answer about 150 questions a day ish.
Yeah.
150, somewhere around there.
Yeah.
Is there a counter on your chat box or no?
Is there
like a comment counter?
I don't think so. No,
I don't think so.
Oh, yeah. Deshaun, you're muted. I saw your mouth move, but.
But we do get well over 150 comments a morning.
Oh yeah. Yeah.
Or questions.
And we encourage people to, when they lose, tell us when they lose.
Yeah. And
they do. And usually, it's they wait, they'll say, I waited too long, it turned red. I just sat there and waited too long.
Mm-hmm. Yeah. Absolutely. If anyone has any questions for the guys, we do have a little Q&A opportunity here. So on Facebook or YouTube, you can just type anything right into the comment box. It'll actually route to us so that we can read that comment off for you, answer any questions you have, or the like.
Just a little follow up to something that Tim mentioned. He probably didn't realize that he mentioned such a profound thing, but he talked about that he trades like one equity. Deshaun trades another one. So they get over and over and over again. They become almost one with that equity because they learn so much about it and how it moves and what it does. That's an important thing. And I have a small group coaching session every Thursday night. And one of the members that's going to come on this week, he just joined back this week, but he only trades SPY and Apple. But he does it with covered calls, and he's not quite doing the process efficiently. And so he's coming into the small group to get coaching on how to do it a little bit better. But that's the only two that he trades because he wants to get good with the charts and seeing the direction it's going in. And you almost get a feel for what's happening because you're doing the same thing over and over and over again, as opposed to jumping all over the market of whatever's the newest, greatest thing today. You're chasing whatever it is, and you're the back of the pack. So when you just trade one or two things over and over and over again, you get a lot better at what's going on with that equity.
Absolutely. Logan says, Tim, I have not checked in a while, but I see returns on one trade 30 to 50% nowadays. How can you do that in 15 seconds in and out?
Well, those are a little longer. And I'll tell you, I think it was Tuesday or Wednesday, Joe, I forget, but the platform took almost 2 minutes to execute a trade. I got into a trade right at the gap fill, and it was continuing down. Got in, and TOS was working on it, so I couldn't get out of the trade. I couldn't cancel it. I was just stuck till it executed. Fortunately, the Apple kept declining, and for that entire 2 minutes, it kept going down. It finally filled somewhere back there. Then I put in my sell to close. Had to wait another minute to get out of that trade. And in the course of that, between the time I pressed the button until the time it actually executed, it had reversed and gone up. But during the course of that 5 minutes, that's where I got a huge return. It was almost $1. It was 98 cents.
Wow.
There.
It was 35% or something like that. The return was like 35%. So,
wow.
Yeah.
Just for a disclaimer, that is not an average day's trade, by the way.
No, I'm looking at these 9 trades, and they're like 7% was 113%, 15%, 3%, 2%, 1.32%, 0.03%, 2.1 loss, 2.1%. So I love this. I love this Greg up here. Greg hit it with just a few words. He says, MMT became so much easier once I saw the light. There you go. Once you see the light.
Yeah.
He says you guys changed my life as well. I really appreciate that, Greg.
So, Pat, thank you for asking. Next Saturday, I'm going to be teaching the MMT one-day course, and we are going to go in deep on MMT. We're going to turn over every rock, pull back every covering on it, and we're going to deepen your understanding of our technique. And I've got a bonus section I'm going to do on Apple as well near the end of the day on the things and patterns that I've uncovered for consistent gains on Apple. If you're new in MMT or if you've been a while, this is really a great course to take. We're really just going to go deep and cover everything. And there's a good amount of new material in this as well. So I hope you join us.
Absolutely. And on that related note, if anyone is on social media, I'm not saying you should theoretically keep an eye out at social media next week in regards to that, but you probably should for your own benefit and for your wallet.
What's that? What kind of
big clue?
I can't give it away. If you would flash our social tags, Marcus, that would be awesome.
Well, those are those ones where you give great deals money wise, but you put the wrong date on there. Right. I'm just kidding you.
No.
Yeah, exactly. Absolutely. We just had a new a snapshot up too. We have these cool videos that give us a kind of a look into their live session. We have one where Tim and Deshaun were going back and forth with different trades and analysis the other day. It's pretty cool. But and then support at Micro Moment Trading is for email address for any questions you guys have about signing up, about the different courses. And then please do go to our website at www.micromomenttrading.com. Remember to use 2 T's. I always forget. Carl asks, Tim, what time does it start?
This will start 9 o'clock Central.
9 o'clock Central.
On the 6th. Yeah, May 6th. So it's not this Saturday, but it's next Saturday. We'll start promptly at 9, and we will go as long as there are questions to be answered.
Pat says, I've been doing it for a good while, but I keep having trouble pulling the trigger. That's on the entry, not the exit.
Mm-hmm. Now, Pat, we'll talk about that as well, about entry points, and I think I've got some things that I think will help you with that.
If I may be bold to say something, Pat, I think if that would be, maybe consider if that's related to kind of an advanced anxiety for selling on time or properly. They could kind of be, almost the same issue.
Mm-hmm.
But fantastic. I want to thank everyone for chatting with us today and putting in so many fun comments and questions. We really appreciate that, and it does help us. Again, follow us on Facebook, LinkedIn, YouTube, Instagram, and we are coming up with something else soon, which is on its way, which I'm not quite ready to announce yet, but we'll have a cool new deal coming out.
Cool.
Awesome. You guys gonna trade late day?
I think I'm good for today. I'm pleased with profits today. So
yeah. I don't know. It kind of lax, Tim. You're a little bit slow on those returns there. I don't think you've done enough today.
Yeah.
You got to pump on those.
Gotta pump on the gas there a little bit more.
Fantastic. Again, next week is trader fatigue, the different anxieties we face as traders and how to handle those safely. Joe, were you going to say something?
Yeah. Well, I was just going to say it's going to be a challenge about getting find it when you can't find it in Google. Trader fatigue. Creation fatigue here. So, yeah.
Absolutely. Pat says hi to Randy before he goes.
Hello, Pat. Hopefully, Pat's up there in the snow country in Arizona now.
Oh, nice.
Okay.
Well, thanks for being here, Pat. Thanks for being here, everyone. And we will see you next week.
Bye-bye.
Hope everyone has a great weekend.
Yeah.
Stay warm.